It's easy to look at what the suits and ties have to say on TV and believe everything you're told. They are very convincing, very professional. Each and every step is choreographed to make it seem as if it's natural and perfect. Yet, just like the VIX index, nothing could be further from the truth. There is nothing real left in these markets. In a country like Japan, they are not even hiding it anymore. In the US, we know about the plunge protection team. What about the countless cases of individuals from major financial establishments getting caught fixing prices? It never ends, yet the majority of people play along like nothing is wrong. You came here for the truth, so let me unveil that for you. Today we're going to look at the stock market. We're going to talk about the economy. I'm going to show you this on a global level, on a global scale. I have a lot of data to get into, several charts, some articles as well. Let's get into it right away. Here you can see the markets on the right hand side, the S&P, NASDAQ, and the Dow Jones all down in the red. The Dow Jones happened to be down 285 points. I'll show you why in just a second, but this has been continuing to be within a range for a period of time. I'm going to show you a chart in a moment that's going to give us a closer range as of August, but if we zoom out, we can see that ever since January 2018, we've been dealing with the same mess. Take a look at this article out of CNBC, essentially telling us that the trade dispute in between the US and China is the primary reason why stocks fell today. Now, tomorrow you might have a different reason, of course. They will always pull out that trade optimism and how things are turning around, but it's never like that, and it's so funny to see the exact same thing appearing over and over again. Real tariffs are being applied on products constantly. We've been seeing this for over a year, and yet just a little bit of potential positivity in rhetoric, not in actual progress, but in rhetoric, that gets the market moving back up. That's how you know this market is so weak, the volumes are so low, and unfortunately it's being run by the computer algorithms. And that brings me to my next point. This is from Northman Trader. The algos are laughing with us or at us. Here you can see from August and up until now that these computer algorithms have put the market within this range, and it has been very, very tight. You can see here the S&P 500 unable to surpass the 2940 mark. Of course, all of this is based on a manipulation in one way, shape, or form with what the central banks are doing, with what the computer algorithms are doing, and at different levels, we see this occurring. Many people would say this is a fact. This just shows you that they're not going to allow the markets to crash. I beg to differ. I do believe that those in control want a major contraction to occur in the markets in order to then step in as the savior and be able to buy things for pennies on the dollar. They want to make it worthwhile. They don't want to crash the market by 30%. They don't want to crash it by 40%. They want to take it down and they want to hit it hard. The average return 30 years since 1989, and you could see that the Dow Jones down 0.75 into the negative. Historically, it looks like September will not be a good month, but I don't like to take it like this because, you can see this happening all the time. The month doesn't really matter. You don't know what to expect when you're coming in. Now, there are certain reasons, seasonality issues, there are all different events that take place. But the way I look at it is that we have an issue that's going on today that didn't happen last year, that didn't happen 30 years ago. And so we can't necessarily say this is the particular month, this is the particular event. I don't really like to do that. I'm just showing you this because it's all tied in to what I'm showing you today. Morgan Stanley short growth stocks get defensive as recession fears emerge. At the end of a growth scare, when recession fears emerge, secular growth stocks typically underperform defensives. And this is what I have been talking about for quite some time. As we have seen the big funds, they tend to move into what they call safer positions. Okay, so that's basically rearranging their portfolio. Maybe they want to go into cash. Maybe they want to put themselves into some bonds. That's what you've been seeing with all the negative bonds. Over $17 trillion worth of negative negative yielding bonds. You look at other types of stocks as well that these companies have started to shift into. They may not necessarily sell all their stocks and go into cash. That's not what they do. When they're trading hundreds of billions of dollars worth of financial assets, they're not going to go and sell everything and shift into what they believe is safer. They have been doing this for a period of time, and they may do that on the way down as well. They're not going to sell just like that. It's important to understand what they do step by step. That's why I cover it here on this channel. I just wanted to interject this point that what we're seeing today in the United States is unbelievable. You can also see at the bottom how this relates to the UK and Canada. But just to show you here that the United States, unbelievably, the amount of deficit that is with all of these different countries is truly mind-boggling. The world total, $627.7 billion. We keep hearing about all of this back and forth with China, but take a look at this. $380 billion worth change since 2016, 23%, okay? This is getting worse as time goes on. People don't realize it. Unfortunately, this is a fact. The economy has taken a dump. All right, now this is the United States. Also, I'll show you some others here, but just wanted to focus on this momentarily. US factory activity unexpectedly, they say unexpectedly, but of course, if you've been paying attention, then this is not unexpected. Contracted in August for the first time in 3 years as shrinking orders, production, and hiring pushed a widely followed measure of manufacturing to its lowest level since January of 2016. The PMI fell to 49.1, weaker than all forecasts in a Bloomberg survey of economists. Below 50, the manufacturing is contracting. Okay, we've talked about this so many times before. New orders dropped to a more than 7-year low. The production index shrank to its weakest level since the end of 2015. I mean, this is what we're talking about here. Supposedly booming economy, hear about it all the time. Yet if you actually just look at it for yourself, forget about the highlights you see in the news. Actually just look at the data. You will see this for yourself. It's unbelievable, but I see it all the time. I get this comment repeated over and over again. The unemployment rate is near historic lows. The unemployment rate is at 3.6, 3.7, this and that all the time. People are so oblivious to reality, and I'm so surprised. It's 2019. The information is available there for you. It's public info, and yet they ignore it. Take a look at Hong Kong's PMI. I mean, you see the situation going on there right now. It is devastating. August sees the deepest fall in business activity since the end of 2008. There you can see it on the right-hand side, what has happened. Now, this has been slowly but surely going downward, but here we can see a major contraction that has taken place. There's no doubt about it. It is now at the level, what looks to me as just over 40, probably right over the line there. That just shows you how quickly things can unfold, and it's just one particular instance. South Korea exports to China year over year in percentage terms, this is also contracting. Now we know that South Korea tends to be a bellwether for the whole world, and here we have a big issue that has been unfolding. You need to know all of these details. That's why I try to bring it to you and actually give you the data as it is available, give you all the sources so that you're empowered, so that you can do this on your own. You know exactly where to look. You don't need to rely on me. Whereas if you look at other outlets, whether it's the mainstream media, whether it's alternative media, generally they don't give the sources, and they ultimately don't really give you the information that you need. They are just spoon feeding you, and that's not what I like to do. That's why a lot of people hate my channel, because the information is not spoon fed to them. But if you're coming to the Money GPS, you're not into that. Here we're comparing the green line, which is the MSCI World Index, something I want to show you for 1 second here. Look at where it was back in January of 2018. Higher than where we are today. Higher than where we were just a couple months ago. Going back into last year, same situation, all right? So we had the whole VIX index issue that, of course, led up to a catastrophic loss in the markets. all around the world in sync. It was crazy actually for those who were paying attention. And then we had this run up in the markets in general. Some were not doing well, but of course we saw this occurring. And then the fourth quarter of 2018 was quite bad. In general, you looked around and saw that stocks were falling. This came downward, and then we saw a resurgence. However, still today, where we are is not back to the peak, okay? Yes, you can look at US markets. I'm talking about the world, okay? When I talk about the stock market, I'm talking about the global stock market. Many people would just say, I don't care. I only own 7 shares of Amazon anyway, so I only care about the US markets. But you shouldn't do that because, of course, there is contagion and these companies invest in each other and so on. You got to know that. Now, I also wanted to focus on the PMI. This, of course, just shows you how this is all unfolding. This happens to be the global manufacturing PMI in a contraction right now at this time. It's at 49.3, but it has been declining all throughout this period. There is no doubt in my mind that right there at the peak, January 2018, possibly could be considered the beginning of where the recession is. I don't know that information, but we'll see. That's generally the way it's going right now at this time. Only time will tell. Now, I just realized that I have way too many tabs open to actually cover in this video. If I spend too much time on it, I'm going to go through these really quickly. So stay with me. Recession story count is surging. On the left-hand side, you can see something I've covered before. On the right-hand side, New York Fed probability of recession in 12 months is the highest in 10 years. This continues to increase. Right now, it looks to be sitting around 35% or so. Keep in mind, during the last recession, which became really obvious into 2008, it peaked out at just above 40%. So that's something you need to know, all right? So they're all doing this now. They're all pointing towards a recession in the near future. They can't decide on when. Nobody knows where it's going to come from, but we will see. Institutional investors are moving further away from equities, something that I've covered repeatedly. The EPFR has this data in this case. I'm showing you on the left-hand side. You can see cash and bonds are seeing a positive flow. And then you have on the complete opposite end of the spectrum, emerging markets, Europe, UK, global, and so on, all in the negative. The move to cash is broadly following the growing risk of a recession, just showing you the cumulative flows into money market funds since 2012. As the concerns grow, so you see investors becoming weary of the possibility that something bad is going to happen, and they react accordingly. US buybacks are off the 2018 highs, but have rebounded year to date. And this just shows you how incredible the amount of money that these companies here, financed by debt, mind you, have been putting into their own companies instead of actually investing in research and development, instead of buying other companies. Right now, they are simply doing stock buybacks. The peak may have been 2018. They were really the only buyer at this point. That looks to be different here in 2019, but still, I mean, we're talking about splitting hairs at this point because they have been purchasing an extreme amount. European buyback announcements are on the rise too. You can see that on the right hand side. Okay, extremely quickly, want to cover this because I do this on a monthly basis. Total return performance of major global financial assets in August. I'm showing you this in local currency and then I'll show you in US dollar. On the left-hand side, silver and gold are at the top, if you can believe it or not. On the right-hand side, all the way, we see Brent, and a few down from that is WTI. So clearly, there are some winners and losers here in the short term. This is just priced in US dollar. I'll show you that here if you want to take a look and pause the video. This right here is the total return performance of major global financial assets year to date in local currency. Then I will show you in US dollar. On the left hand side, Greece, Athex, clearly the winner here in their local currency. After that, we have Russia, we have oil, we have the NASDAQ, and so on. Take a look at it in US dollar. Greece, Russia, oil, NASDAQ, all of these have done very well. Just beyond that, we see silver and gold up nearly 20%. Okay, that just shows you, despite the fact that all the attention in the media is surrounding Amazon and so on, we see that there are less popular investments out there that certainly have the attention of some investors. That's all for this video. If you found it informative, hit that like button. When you hit the like button, you make a unicorn smile. If you want to know how to actually make money, how to build a business, all the write-offs and everything else that comes with a business that you get in this asset class that you do not get in the others, I have a way to make money on Amazon that I taught in this course for free. It's at the AmazonGPS.com. If you want to know all the details about it, you can get that at the AmazonGPS.com. There will be a link in the description. If you want to know all of the details about history, the asset classes, the foundational principles of finance, I have it in these 2 books. Check it out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Wait a second, hang on, don't go anywhere. If you haven't seen this video, it is extremely important, connects directly with this one. Click on it and I will see you there.